This year's financial secretary's budget, I would rate it as being very good for tackling the crisis. It provides relief to individuals and to companies to ensure that the economies will continue to be able to rebound once the virus infections and outbreaks are under control. By tying over the difficult period, I think the Financial Secretary has responded to public interest in a very wise and astute manner, which will not damage long-term development of financial sustainability. In one area, I think there is more could have been done, and that is in terms of rejuvenating and diversifying the economy. He has relied much greater extent on financial incentives. He does mention in many areas while he wants to create a more digital and a smarter city. I think an important area there would actually be deregulation, lowering of barriers of entry in many sectors, and in particular to make available government administrative information data so that the forces of the market will be able to galvanize and take advantage of the available data, reduce cost of entry into an industry to spark the diversifying away from the amount of reliance we have on some limited sectors. In particular, in our history, we realized that the opening up of housing transactions data has sparked a sea change in how real estate sales and purchases industry, basically the real estate agency industry, has been transformed. It has not only been consolidated, it has gone overseas. Now, this is what I would anticipate would happen as we open up our data. There has been some progress in opening up hospital authority data, but I think it could go significantly wider. A second area where the Financial Secretary could have gone further is in housing and land. I think one of the great challenges the world over, including especially in Hong Kong, has been the appearance of new technology and globalization, which has led to a huge boosting, particularly after repeated financial crises the world over, in terms of very low interest rates and asset price inflation, which has created considerable inequality in terms of wealth between those who own their homes and those who do not. I think Hong Kong is in a unique situation in which 30% of our population live in public rental housing and 15% of our population live in home ownership schemes. Further relaxation in terms of transactions and ownership of those units, particularly rental units, can be transformed into sale for purchase units at considerable discount to the market will be an enormous step towards empowering the have-nots. It will, in one fell swoop, benefit some 45% of the households in Hong Kong, create wealth well in exceed of $4 trillion, which will be an important boost to the depressed economic environment that prevails in Hong Kong today, not only because of the virus outbreak, but also because of the earlier 7 months of social protest. And I think it will improve inequality, efficiency in the land and housing markets, and be a big stimulus to consumption, which is now very lacking in the current situation in Hong Kong and for some time to come.